Sundar, you're the Executive Vice President at ADCB. What role is ADCB currently playing in helping the real estate industry?
Okay, in fact, we've been extremely prudent right from day one. We started our lending in 2006 when the market was actually moving extremely well, and we've always been a very prudent player. For example, we never went berserk as far as loan to values are concerned. We used to probably play at 85 to 90%. Most importantly, we used to see the profile of customers, in terms of the income, in terms of the debt burden ratio, the properties, and so on and so forth. Now that's actually placed us in good stead. Even today, in fact, when the market actually went through a lot of crisis, we didn't step back. We only altered few changes as far as the policies are concerned. We brought down the 90% loan to value to probably around 80-85, but we are still in the market lending to customers. So we've been very consistent so far. Our forte is basically understanding the customer's profile, right? We have done so far a lot of salaried profiles, which is actually placing us very comfortably, and we continue to do that lending. And we're doing extremely well.
So can you tell us if you'll be increasing your LTVs?
As I said, and I was actually talking in the panel discussion as well, the most important lever which the bank can control, or probably the lender can control, is a loan to value. Now, if you try and play with the loan to value, you might be running a risk of trying to overexpose yourself, right? So loan to value is something which we're very attached to, very emotionally. We would not like to play beyond 85% loan to value.
Are Islamic mortgages currently offered?
Okay, we have, in fact, when we launched, we were a conventional player. Then we got into Islamic because there was this, latent demand from customers. And we actually don't have a mindset between conventional and Islamic. That's what you would find in most of the banks. Today, surprisingly, Islamic contribution is around 50 to 55% of the total business we do. And that's actually on a rise. So customers are very comfortable getting into Islamic mortgages. But if you look at in terms of the offerings, we have almost kept the same. The irony of this market is that when a person gets into Islamic, in Islamic you have this that during under construction you don't charge interest. Whereas in our situation, we would be charging interest even during construction. So for us, conventional and Islamic is almost the same. But yeah, the documentation, the mindset is completely different if you get into Islamic offering.
Are banks in general looking for more stability in property values before being more active in lending?
Sorry, I didn't get your question.
Are banks in general looking for more stability in property values before they look to lend?
See, if you look at the property values today, one is we have reasonable level of comfort that customer today in today's market conditions is doing a lot of due diligence. Right? He's checking the quality of the developer, he's checking the quality of the property, he wants to basically get into community living, right? So all the due diligence today, probably 80 to 85% is done by the customer, right? And when we do a basic interview with the customer that why you want to take this mortgage or why you want to buy this property, by and large, a lot of customers have said we would like to go and stay in the property, and that raises a comfort level for the banks, right? So if a person is staying there, there's a lot of emotional attachment to the property. He's staying with his family, so probably he will not default on the property where he's staying with his family. And that's the behavior we've also seen in advanced market. Typically a family staying in a property doesn't become a delinquent customer. So all those are good signs, right? Property prices have actually stabilized. It depends on the quality of the property. For example, if you look at Green Community in JLT and Dubai Marina, it's more or less stabilized. And you have a lot of customers buying properties right now.
So would you say you'd seen a pickup in property transactional activity in Dubai and Abu Dhabi?
We have not really seen pickup. I'm saying if I have to compare with 2007 and 2008, but today we do only business of completed properties. Today no customers are buying any under construction properties. No one wants to probably wait for another 1 or 2 years, right? Today he wants to buy the property and go and stay there. Because of two reasons. One is he can't speculate on the property, right? And second is trying to substitute his rentals. Today if he's paying X amount of rentals, he wants to go and stay the property and probably pay that interest cost. And also with the hope that over a period of time, and this goes through a lot of cycles, that in the next 3 or 4 years, the property prices might gradually pick up. So with those kind of mindset, he's becoming a property right now.
And finally, do you think interest rates are still too high in comparison to more developed markets?
See, the irony is the interest rate is purely linked to the cost of borrowing, right? For example, today your customer deposits are in the range of around 3.5 to 4%. And it's also very important from the bank's point of view to cushion for, risk. So you need to play some sort of, leeway. So given all these market conditions, given the cost of borrowing going up and given this risk factors, Today we are probably pricing between 6.5 to 7.5%. We actually launched a teaser rate where you probably take a mortgage and your rate is 6.5 fixed for 1 year, and beyond that it moves into linked to a retail base rate. I think it's very important that the cost of borrowing has to come down so that the customers really enjoy the benefit of the interest rates. So today the property prices have got stabilized. If you can try and add a lot of value through interest rates, I think the market is only going to get better.